Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, after the recent dump from the recent release of the new CPI numbers, we're seeing the price of Bitcoin bounce back to the upside after perfectly hitting this technical price target. But not only that, we're also seeing a massive signal flash right now on the daily Bitcoin chart, which I'll talk more about later in the video, so definitely watch to the end. First of all, taking a look at the new US CPI inflation numbers, which just came in at 8.2% year over year. And in case you missed my last video that I posted yesterday on the channel, the majority were expecting this number to come in at 8.1% year over year based on consensus, although the trading economics forecast was predicting an 8.2% year over year inflation rate, which obviously is what we saw. And so based on the trading economics forecast, technically we hit those expectations, although based on what the majority were expecting based on consensus, we did actually come in slightly above expectations, obviously 10 basis points above the expectation. And basically how these market expectations work is going into the event, so just before we got these new CPI numbers released, considering the majority were expecting around an 8.1% inflation rate, the majority in the market were pricing in for an 8.1% inflation rate year over year to be announced today. Although when it came in a little bit higher, that simply meant that the market didn't actually price in enough pain compared to what it was expecting. And so pretty much as soon as these new CPI numbers were released, the market actually dumped because once again, the market had to price in some more pain than what it had previously anticipated. And now if you want to know what the markets have actually priced in with these new CPI numbers and the recent drop across the markets, we can actually take a look at the futures market to see what the market is pricing in terms of the next interest rate hike at the next Fed meeting, which by the way is on the 2nd of November. And right now, at the time of recording this video, the market has fully priced in a 75 basis point hike, with some market participants even pricing in further for a potential 100 basis point hike. And just for context, before the recent CPI numbers were released, the majority were still expecting a 75 basis point hike, although some of the market were expecting a potential 50 basis point hike at the next Fed meeting, and no one in the market was expecting a 100 basis point hike at the next Fed meeting. And so basically the market went from mostly pricing in a 75 basis point hike and some of the market pricing in a possible 50 basis point hike at the November Fed meeting to now the market has fully priced in a 75 basis point hike, with some of the market even pricing in more pain for a potential 100 basis point hike, although right now that 100 basis point hike still remains a low probability of only 5%. And now this next bit is really important because if you're looking at all of these probabilities for future Fed meetings over the next 1 year, only just yesterday the majority in the futures market were pricing in for the federal funds rate to peak at a high of 4.75% sometime early next year. Although now, due to the release of the new CPI numbers, these probabilities have obviously changed. And so instead of the majority of the futures market pricing in for the federal funds rate to peak at 4.75%, now the majority in the futures market is expecting the federal funds rate to peak at 5%. And once again, if you missed my last video that I posted yesterday on the channel, you can go back and watch that video if you want to see what these probabilities were showing in yesterday's video. And so basically what all of this means is that inflation, first of all, came in slightly higher than what the majority were expecting based on consensus. And so due to that, the futures market has priced in even more pain than what previously was priced in. And so this means if the Federal Reserve keeps hiking the federal funds rate up towards a peak of 5% early next year, then we might not see too much action in markets. We might not be overly bullish or overly bearish because right now the majority in the market has already priced that in. But if the Federal Reserve raises the federal funds rate above 5%, or if the market expects the Federal Reserve to raise the federal funds rate above 5%, then we could expect more bearish price action because obviously the market would then need to price that in. But on the flip side, if the Federal Reserve never actually hikes rates up towards 5%, then that would actually be very bullish for markets because the market is pricing in all of this pain. Once again, the majority in the market has already priced in for rates to go up towards 5%. And so if the federal funds rate falls short of 5%, or if the market begins to expect the federal funds rate to fall short of 5%, then we would likely see more bullish price action as the market begins to realize they've actually priced in too much pain than what was previously anticipated. And now, obviously, inflation isn't the only thing that can affect those probabilities. For example, employment levels can also affect those probabilities. But with that being said, considering the fact that inflation is really the main problem that central banks are trying to solve at the moment, particularly the Fed, it is likely the most important factor in determining these future probabilities for these future Fed meetings. And so what that means is that if inflation comes in slightly higher than what the market is expecting, then the market needs to price in more pain ahead because the federal funds rate needs to go even higher to bring down inflation. But on the flip side, if inflation drops faster than expected, if it comes in lower than expected, then that would simply mean that the market has already priced in too much pain than what was expected. And so in a potential scenario like that, with inflation possibly dropping faster than expected, that would actually be extremely bullish for markets. But anyway, just before getting into the crypto part of this video, first giving you a quick update on the US stock market. This right here is the Nasdaq 100 index on the daily time frame. And considering the fact that the CPI numbers were released before the stock market opened in the pre-market, so before the stock market's trading hours, we actually saw a significant dump in the stock market. Although what's very interesting to see, since then, since the market opened up, we've actually seen a decent recovery back towards yesterday's daily candle close. And so at least at the time of recording this video, this has actually been quite a significant bounce in the stock market, quite a significant recovery after the massive drop that we saw in the pre-market before the stock market actually opened. And of course, due to the fact that the crypto market and the stock market are highly correlated, we also saw a quick dump and now more of a bounce in the short term in the price of Bitcoin at the moment. This is the daily time frame, by the way. And right now, at the time of recording this video, the price of Bitcoin is still holding above this important horizontal range of support, which is coming into play in between around 18.4K and around 19K. And so, like I've been saying for a while now on this channel, the next leg to the downside is not actually confirmed while we see the price of Bitcoin still holding support at this price range right here. But despite the price of Bitcoin still finding support at this price range, which means we have not confirmed another leg to the downside, we still have some bearish signals showing up in the daily Bitcoin price oscillators. For example, we've now confirmed a bearish cross in the daily Bitcoin MACD, and we're also seeing a break to the downside in the daily Bitcoin RSI below this uptrend line of support. And so technically speaking, these are both bearish signals for the price of Bitcoin, telling us that we're seeing a return in some bearish momentum. Although once again, another leg to the downside in the price of Bitcoin is not yet confirmed, while the price is still finding support above around 18,500. But zooming further out on the daily Bitcoin chart and taking a closer look at the daily Bitcoin RSI, what we've seen so far this year is basically every single time where the RSI enters an uptrend for the daily Bitcoin chart, we usually see a somewhat shorter term relief in the price of Bitcoin relative to the larger downtrend that's still at play. But then what has consistently happened so far this year is that when the daily Bitcoin RSI confirms a break below this upwards trending line of support, that basically signals another major move to the downside in the price of Bitcoin. Although with that being said, as I talked more about in a recent video here on the channel, even though each of these signals were obviously bearish for the price of Bitcoin, we've actually seen less and less bearish momentum on each of these bearish signals so far. For example, after this first bearish signal in the daily Bitcoin RSI that we saw this year, the outcome from that was approximately a 44% decline in the price of Bitcoin. Now, looking at the second example, we actually saw around a 42% decline in the price of Bitcoin. Looking at the third example, we saw around a 28% decline in the price of Bitcoin. And so once again, even though technically speaking, these signals were still bearish for the price of Bitcoin, we actually saw less and less bearish momentum after each of these bearish signals flashed. So what this potentially tells us is that the larger bearish trend at play here is actually losing bearish momentum. But even though that is the case so far, based on all of this data that we have in front of us, we are still currently seeing the fourth of these bearish signals so far this year, which technically speaking means that we should still be due to see a little bit more downside price action. But obviously, we still need to keep in mind that important range of support right here, which I talked about just a moment ago. But anyway, zooming into the 8-hour Bitcoin chart, we're still technically seeing this break to the downside continue in the price of Bitcoin. And in in fact, the first technical price target for this break to the downside has now been met. So obviously, if you took this trade, congratulations, because this has been a profitable short position from the break to the downside to the first technical price target, which, by the way, is at the base of the wedge, which was sitting at around 18.3k, as I've been talking about over the last few days. And in fact, not long after we hit that technical price target at around 18.3k, which if you're in a short position with a take profit at that level, you would have still done very well. But not long after we hit that price target, we've actually seen a bit of a short-term bounce back to the upside in the price of Bitcoin following the stock market, obviously in its short-term bounce so far. And if you still have no idea how to trade a move like this and make a lot of profit on a move like this, then stick around to the end of this video. But anyway, just giving you a quick update on the short term for the price of Bitcoin. This right here is the 4-hour time frame, and right now we're seeing the price of Bitcoin bounce from this local low, which is just above around 18.1k, which is obviously another level I've been talking about on this channel over the last few days. And of course, as we can see here in the 4-hour Bitcoin RSI, this bounce is also happening as the RSI briefly entered into oversold territories, telling us that we have somewhat limited room to the downside in the immediate short term, and we're due to see a bit of a relief to help reset the RSI. But due to the 4-hour Bitcoin MACD still showing very low momentum to either direction, one of the most likely scenarios in the immediate short term based on this momentum indicator is most likely going to be a little bit more choppy price action, either to the side just like that or slightly to the downside, considering the fact that this currently is a shorter term bearish trend. But it is important to mention that when we're looking at the 4-hour time frame, this is only talking about the short-term movements, as in what we could expect in the coming hours, maybe over the next 1 to 2 days or so. But anyway, getting into the Ethereum part of this video, this right here is the daily Ethereum to US dollar chart, and right now the price of ETH has already experienced an initial dump to the downside and now is bouncing back up, forming quite a large wick on the daily time frame, similar to the stock market and the price of Bitcoin. But with that being said, the price of ETH is still currently trading below this upper trending line of support, which is sitting closer towards around 1290 approximately. And so if we end up seeing a daily candle close below that level, that is still not good for the price of ETH, as it is technically a bearish signal, helping to confirm this potential break to the downside for this bear flag. And in that case, if we end up seeing a daily candle close below this support that I just mentioned, then we do have a technical price target in that case, which is sitting at around $1,000 approximately. But once again, that price target is not currently in play while we haven't yet confirmed the break to the downside. And also something else to pay attention to here on the daily time frame is of course the daily Ethereum price oscillators. And first of all, the daily MACD right here is still showing very low bullish momentum on the daily time frame, and the daily RSI is currently experiencing a break to the downside, somewhat similar to the daily Bitcoin RSI, which is also technically speaking a bearish signal. And so even though the price of ETH is currently experiencing a short-term bounce and forming this large wick to the downside on the daily time frame, we still technically have some bearish signals showing up here on the daily time frame, but these signals are still yet to be confirmed with a daily candle close. But anyway, taking a look at the shorter term, looking at the 4-hour Ethereum to US dollar chart, obviously we can see that short-term bounce even more clearly, and this is of course happening just after the 4-hour Ethereum RSI entered into oversold territories, telling us that we have limited room to the downside in the immediate short term, and that we're due to see a bit of a relief in the immediate short term to help reset the RSI. And now if you're looking at the 4-hour Ethereum MACD, at the moment this is still showing very low momentum to either direction, and so once again this indicator technically points towards most likely some more choppy sideways price action, which will also help the RSI recover back towards its neutral level, which is 50. And if you want to know how to maximize your profits in crypto, no matter if the price is going up, down, or chopping around sideways, then check out these videos popping up right here on your screen. The video in the top left of your screen shows you how to long or short, like I spoke about earlier in the video, and the video in the bottom left of your screen shows you how to make money in a choppy sideways price range. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.